A warm welcome to today's edition of Money Moves. I am Melissa Enoch here at the FMDQ studios in Lagos.
And I'm Grace Agbaragu. It's Thursday, November 27. We thank you for joining us at this time on the show.
All right, then let's tee off with your news now. As always, Africa Finance Corporation has secured a $75 million term loan from the Arab Bank for Economic Development in Africa, deepening their strategic partnership. The deal was signed by BADEA President Abdullah Al-Musaibir and AFC CEO Samaila Zubairu during AFC Day at the B20 Summit in Johannesburg. The facility strengthens AFC's capacity to fund critical infrastructure in power, transport, logistics, heavy industry, digital networks, and natural resources, supporting high-impact projects across the continent. In Rwanda, the 28th annual conference of the African Securities Exchanges Association in Kigali has opened with a call for deeper capital markets and a stronger equity culture to drive long-term investment and growth. Rwanda's Finance Minister Yusuf Murangwa said the continent must take bold, collaborative action to build more resilient financial markets. Here are excerpts.
Our goal is to help East Exchange and all our members become a catalyst for the national and regional economic development. Recognizing the uniqueness
GDP compared to a global average that is closer to 100%. To empower Africa's enterprises, we must shift from relying primarily on loans to embracing equity, risk.
In Ethiopia, the nation has created a new specialty coffee association. To boost its position in the global premium coffee market. The body brings together farmers, exporters, cooperatives, researchers, and government agencies to tackle fragmented production and weak international promotion. Its work coffees. The association will also support sustainability and research and skills development to drive long-term growth. In central banking news, the Bank of Ghana has delivered another sharp rate cut, lowering its benchmark interest rate by 350 basis points to 18%. Policymakers say the move reflects a brighter economic outlook and expectations of further inflation easing. It brings total rate cuts this year to 1,000 basis points as the central bank seeks to support recovery while safeguarding price stability. Let's hear more from Dr. Johnson Asiema, the governor of the Bank of Ghana.
Inflation decline in the year has been steady and on target. From 23.5% in January 2025, headline inflation has eased to the bank's central target of 8.0% in October. The decline was broad-based as both food and non-food inflation are currently in single digits. And let me say that this is the first time since July 2021. The sustained disinflation has been driven by the continued maintenance of a tight monetary policy stance, sustained fiscal consolidation efforts, a stable currency, and relative improvement in food supply. Also, the bank's core inflation measure, which excludes energy and utility, has declined, reflecting significant moderation in underlying inflationary pressures. Price expectations by consumers, businesses, and the banking sector for the next year signal well-anchored inflation expectations. The bank's latest near-term forecast show that inflation will continue to decline and settle between 6.6 to 8% by the end of the year. On interest rates, these have generally declined in line with the reduction in the monetary policy rate. The interbank weighted average rate declined to 21.0% in October 2025 from 27.7% in the same month of 2024. The interest equivalent of the 91-day benchmark rate eased to 10.6% in October 2025 from 25.8% in October 2024. Also, average bank lending rate declined to 22.2% compared with 30.5% in the...
In other news, Guinea has launched a 1,500 billion Guinea franc 5-year bond to boost domestic financing and deepen its public securities market. The issue, structured at par and fully materialized, comprises 300,000 securities at 5 million Guinea franc each. Subscriptions run from 24 November to 24 December 2025, with the bond offering a
We are improving our maintenance there. That is why we commented today that we have put in place a 3-year plan that started this year with the first shutdown in Q1 of FY26 in our Kolimpong plant. The second thing that we are doing in Zimbabwe, as you have seen in the presentation, is we are starting our solar project, which is going to bring a significant savings, and also is going to improve significantly our savings, and also is going to improve significantly our C2 emissions. The third thing that we do to have the support of the biggest and most important engineering cement company in the world to upskill our talent in Zimbabwe to make all this process faster and more sustainable. On the other hand, please remember that we have the newest plant in Zimbabwe, in Harare, and overall we have good assets there. But yes, it's very important to update and to well maintain our assets to run there. In the case of Dangote, allow me to say this respectfully. I think it's very important to differentiate between announcement and reality. We all read that announcement when Aliko Dangote visited the president in Zimbabwe last week. We don't have any indication that that project is going to materialize anytime soon. We monitor.
Finally, on News Now this Thursday, Morocco is entering 2026 on a stronger footing with faster growth, easing inflation, and a tighter reform agenda. Mardi's latest transition report shows real GDP grew 4.7% in the first half of 2025, almost double last year's pace, supported by industry, services, and a modest agricultural rebound. While inflation averaged 1.2%, tourism was up 16% through July. Drought remains a weak spot. Agriculture grew 4.6% but lost over 100,000 jobs, highlighting climate vulnerability. Still, gains in services and industry helped pull unemployment down to 12.8% by June. I am Melissa Enoch, and that's it on News Now this Thursday. The show returns shortly with Grace at the Archives Room, giving us our markets round. Stick around. We are here at Africa Energy Week in 2025. First day of the event is booming everywhere. A lot of people, many stakeholders from the energy value chain.
We're here to promote the need for investments in a robust downstream sector to truly have energy security for the continent.
Welcome back to Money Moves. Let's now go over to Grace for today's market update. Hello there, Grace.
Hi, Melissa. Let's now track how the markets traded today, starting off with the equities. The African equities were mixed today. In Nigeria, the NGX All-Share Index closed on the positive by 0.12%, while the BROVM declined 0.08%. The Nairobi Securities Exchange fell by 0.79% to 180.38. In South Africa, the Johannesburg Stock Exchange slipped 1.05%, while the Zimbabwe Stock Exchange gained 1.82%. And in North Africa, the EGX 30 closed the week on the positive, up 1.27%. Let's do a quick round of some of the Pan-African currencies. The Rand eased 0.21% to 17.17 against the US dollar. The Egyptian pound declined 0.16% to 47.65, while the CFA franc rose 0.19%. The Kenyan shilling slipped 0.05% to 129.73. The Moroccan dirham gained 0.17% to 9.25, while the Naira dipped 0.12% to 1,443 Naira 69 kobo. Let's switch into the commodities data deck, beginning with energy prices. Brent crude edged up 0.11% to $63.20, and US WTI rose 0.29% to $58.82. Natural gas slipped 0.33% to $4.54, while Arabian gasoline gained 0.60% as of 13:19 GMT. Now, finally, two metals prices. Gold fell 0.38% to $4,149.50, while copper declined 0.97% to $5.05. Platinum rose 1.62%, aluminium eased 0.28%, and iron ore gained 0.11% as of 13:21 GMT. And that's our Money Moves market